Good morning, everyone, and welcome to EPSMomentum.com. We wanted today to go over something very special for earnings and earnings season is the earning gaps. So many investors use earning gaps as an indication of how the earnings could outperform this quarter and the next, and even ripple over several quarters by just monitoring earning gaps. So we have that on EPSMomentum.com. What we do is we have an entire drift calculation which takes the first reaction and second reaction of the market, the overnight and during the first day of earnings reaction, and then calculates drift statistics based on that and project the stock price, as you can see on the screen, for the next 90 days. So today let's go into finding names with earning gaps in an efficient way, and most likely finding good winners. Okay, so maybe you can start by clicking on best stocks, which is one of the classic and most famous search that we have there. Best stocks give you the earning momentum greater than 20. If you're not familiar with the earning momentum is, we have a scale from -50 to +50. Everything above 20 is amazing. Everything above 0 is great. Let's be less stringent here and put 10, for example. Want to make sure we have either earnings or sales breaking out here. So let's put at 10 because this is not the main factor here. Timing momentum, I'll put it at 0. Market score, put it at 0. Price change as well. Market cap, $1 billion is fine. So we are going to go into the post-earning announcement drift section, PEAD here, and really click on the important fields. So there's a bunch of fields you can click on. You can have the drift name, drift A, B, or C, positive or D, positive overreaction, negative overreaction, but that's not the point here. The point is to use those two fields, the price change from between the day of earnings and the open of the next day after earnings. It's usually the day before earnings, so the company that reports at 4 p.m. is considered to report the next day because the session is already closed for the day. So it's ED -1 all the way to the open. So it's basically the overnight reaction of investors. We'll also look at the price change from the open to the close the next day, or call it sometime the earning day, really when the earnings are public the previous day or in the morning, and then it's the first real trading session after earnings. So very simply what we're going to do here is filter positively on the open here. Okay, so on the price change, ED -1 to open, so really on this field. So what you get when you get this, you can sort quickly on clicking on the column, and here you have a bunch of stocks that grew 100%, AppLovin, Credo Technology, and so on. They all have earnings greater than 10, earning momentum greater than 10, but we can see it's a big jump. So let's click on AppLovin, for example, and what I can see here is AppLovin really jumping up very nicely after earnings. So if you scroll down, and let's say you want to zoom in on the day of earnings, you can see that that the price really went from a close at 168 and it opened at 229. So big jump, the equivalent of a jump of 36%. That is truly amazing and truly unique. So most likely it'll produce great results. We can have a look at history, and we can look at previously if there's any quarter where the stock actually broke out significantly. So here, for example, a while back it went from $30 to $33, about 10% jump, earning gap, and that was truly significant. Here as well, 48 to about with 54, so big gap as well. So again, big gaps, another gap here, maybe not here, another gap here. So really, this company is doing a gap every quarter or every 2 quarters, and the stock has been multiplied by 5 or 6 or even 10 since the first gap. So this is really a good metric to sift through thousands of stocks. I went from 4,000 stocks to 157. That is very, very, very good, and something to watch very closely. The second thing is the during the day session, so the session after the gap, right? So it's really a confirmation of the gap. So not only it went up, but also it got confirmed drastically, right? 7%, 24, 41%. So these guys are really knocking the ball out of the park. So one could argue that this is really possibly modified by how the S&P is moving, right? So if the S&P is having a great day and growing 2-3%, it's pretty rare, but when it does, all stocks lifts all boats, right? So what you can do is you can specifically look for the ratio of the stocks to the S&P, which we have here, ratio S&P, SPY, and so that will give you a ratio, but that's not what I'm looking for here. What I'm looking for is this field, which is the ratio of the change of the stock to the S&P since the last earning day. Okay, so that tells you, regardless of when the earning day was, if the stock has been outperforming the S&P. So I can put that ratio in there. Okay, I am also going to filter to today and only take, I'm going to description and only take the next report date, the last report date, meaning stocks that just reported, let's say in the last 45 days. So I'll put 45 days being a limit here. And now I am going to filter on the change of the stock versus the ratio to the S&P. So what's interesting here is not only did the stock do an earning gap, but on top of that, the second day it was confirmed by even a positive rally. And thirdly, it beat the S&P significantly since that date, right? So we can click on Doximity, for example. You can look at the matrix here as well. So Doximity just reported huge jump. So obviously it beat the S&P because that was a huge jump. But we can look into what the earnings were or are at this time, which is literally yesterday or a business day ago. So 55% growth on earning per share from 29 to 45, 18% acceleration, so that's truly impressive. 25% growth in sales from 135 to 169, and 4.19 in acceleration. So again, truly impressive here. So we get one good candidate. We can click on Palantir as well. Went up 24%, and then even grew 1%, and then even more rally. Let's have a look at earnings: 75, acceleration 32, sales 36, acceleration 604. Okay, so that's really, really impressive. So all these names: Affirm, Expedia. Let's have a look at Expedia. Expedia, big jump from 173 to 202, big acceleration, pretty decent sales, extremely high earnings. It went from 172 to 239, so that's a 25% acceleration, and the stock shows broke it high, and is on the tear right now. So Expedia, Cloudflare, RBC, Interactive Broker, SS&C, and so on. So, click on those names, see the jump. Goldman Sachs as well, big jump here. So pretty nice to get this. Now, what you can do is you can click on save screen. You can record your screen, save it, call it earning gaps, and then whenever you click on earning gaps, you'll get straight there. So that would bring you a lot of value immediately. No need to reconfigure the screener all the time. Okay, the second thing that you just heard me mention several times is the acceleration. So I'm mentioning this acceleration number. Why is that so important? Well, because we can monitor growth, but we want to see if it's growing or shrinking. What's the movement? Where is it going from and to, right? So here we're going from 8.4 to 1195, and from 548 to 1195. So that is 65% growth and 8% acceleration from the previous quarter, which is actually the acceleration from the previous year. So again, a very impressive acceleration, both earning and sales, and we can focus on that. So there is a search that is called new acceleration here. So maybe you can click on that search, and it will configure the screener exactly how it's supposed to be configured for this, and bringing in a several set of fields. So I'm going to go over them very quickly. So the EM, we've seen it. We can set it so EM greater than 10, for example. EMQ minus 1 is really the previous quarter from this one, right? So we can be restrictive here or not. Let's lose it. Let's make it looser. I'm gonna skip those two for now. This is the sigma of earning per share and sales. So this is basically the standard deviations of earning per share historically, right? So you would assume earning per share would grow and grow. This is what it's doing here. But Tapestry, for example, is 2.39 standard deviation historically, so which is obviously great. You might have some stocks that have closer to the mean. So Netflix is 0.56. So earning per share are kind of in the normal range. But let's remove those fields and make it looser. Maybe we want stocks that are about 30% from their high, just for kicks, and see what's there. I'll remove this field also, and the market cap, I'm gonna keep it at a billion or so. So let's go into those two fields I left out. One is the sequential number of positive acceleration in earning per share for the company. So you would go here, sequential positive EPS acceleration for the company. So how many times the acceleration has grown in a row for earning per share for the company? 1 time, 2 times, 3 times, 4 times, and so on. Let's make it 2 times. And this is the same, but for sales, which is this field here, sequential positive acceleration. Gonna remove those two. And same thing. Well, let's see what we get here. We get 76 names here. So again, good list of candidates here. What I'm going to do as well is I'm going to click on the revisions. So the revisions are analyst estimates revising their estimates up or down. And we can click on this one, which is the actual value revised since the beginning of the quarter. So we are going to filter for the quarter. So I'm going to click for last report date. Since we're about 45 days away from the beginning of the quarter, I'm going to put 45. There you go. And I get a bunch of names here, and this is nice and good. What I'm going to do is sort by the change in revision score, right? So Amphenol, for example, APH. Look at this. So no gap. Well, a little bit of a gap here, tiny, but what we can see is earning per share growth 19, 28, 34, accelerating 5, 8, 516, sales 3, 8, accelerating 4, 5 quarters in a row. That's pretty impressive. It's also surprised the market several times in a row in sales as well, so that is impressive. So what you can do here is filter that way. I only have 30 stocks here, so I'm pretty stringent already. these two fields, the acceleration is really the crux, so it makes it really, really stringent. Actually, if I increase that, I only get 39 stocks. So only 9 stocks are not in their 32-week high. Only 30% from the 1 year high. So that's good. So the entire earnings season is now summarized in front of your eyes. You can see that we get names that have earning momentum extremely high, 28. So TSM, for example, and earning gap, TSM. Stock price has, a little bit of a dump here for DeepSeek thing, but otherwise looking good, and really plateauing, ready to break out. Actually, it did broke out and then was brought down back to lower levels. Right, so earning per share revision. So these guys, let's focus on earning per share revision. If you go to the top and you go to revisions, here I can see, I'm going to remove those two curves and focus just on one revision score number. So these are the revisions that we take every day from analysts. Any change in estimates, you have them here. You have the analysts 1 day ago, 7 day ago, 40 day ago, and we just increment a number, which is our revision score. It went up 4.70 since the beginning of the quarter, or 28%. So 470 is good for comparison between stocks. So here I have very good comparison. This stock, Macom Technology Solution, MTSI, it went up a lot. It's CM22. It's plateauing, close to its high. Again, good names here. So yeah, very important. If I overlay this to the earning gap, I might get something interesting here. Let's do positive earning gap, and now I have even better names. I'm gonna filter for positive revisions here. There you go, and now I'm down to 12 names. So I can see the Penguin Solution, KLA, Blackstone. Can click on Blackstone. I can see the revisions positive. Did I filter earning gap properly? Yeah, I did. But Blackstone had a 1.41. But we can filter on the biggest earning gap, 19%. Tapestry, ATI. So let's click on ATI. Huge jump in revision score, huge earning gap. This is what we want to see. Okay, so very easy. You can click on your earning gap search here, and it brings all your search back. Or you can click on acceleration, and it brings all your acceleration back there. And you get your search pre-can and done. Let's focus on earning gap. And then you get all your names, and you can click on Doximity here and get all the information. Again, very easy to filter for the good stocks. I hope you find this useful, and we will give you more tricks, more things that more nuggets that you can find on the system shortly in the next few live sessions. So I hope you enjoy this session, and thank you very much for